Good morning, and welcome to the Deal Room Live, the daily real estate deal tank powered by Titan Impact Group, a global leader in AI-driven real estate investing and funding, where the real estate world meets speed, precision, and profit. And bring us your deal so we can put it into our AI model that analyzes and structures real estate deals in minutes, generates all the docs you need to get the deal done, and gives you a verified, unbiased breakdown of due diligence reports. The investors get the advantage of getting fully vetted AI-analyzed deals that cut their due diligence time down by 60%. So you're in the right place. Let's open the deal room now and get into today's opportunity. Good morning. This is the note taker room for Land Shark Mastermind. Got a litany of note takers in here. Do we have any live people? Nope. At some point, we'll have to start advertising this room out so people come to it.
Okay, so as I understand it, today we're talking about opportunity zones.
Yes, Miss Catherine, the floor is yours. So you want to talk about opportunity zones? You want to talk about oil and gas? Whatever you want to talk about. You're the Titan Impact Group is the sponsor of our deal room, so that's why we give you Fridays to talk all the great things you got.
So I mean I want to learn about opportunity zones. I'm not versed in them at all or educated in them. I mean, from a 50,000 foot level, but I want to dive into deeper just because I think there's some huge um well, we know that there's some huge things coming with or because of the Big Beautiful Bill Act. And so leaning into um, leaning in to really understand the implications that are coming forward so that people can plan future in plan their future better, I think is super important and helpful. So figuring out where we can all go to learn about this. Now I know you're certified in this, and Roman, I believe, is. Um, so yeah, those would be the things. As for the oil and gas, we have a webinar to teach people about that actually right after this one. Um, so people can come to that webinar. I can put the registration link inside of it. Actually, let me do that right now. So this is if anybody's interested in learning about another asset class, diversify your portfolio and bring more holistic investment to it, be it cash flow, tax benefits, all of that. This is another fabulous asset class outside of real estate that I think is really important. And we're going to be doing more videos and understanding more about that. So everybody can come to that, which we're really excited about. But let's dig into opportunity zones because I really want to understand this because of the growth that's happening, the expansion that's happening everywhere. I mean, I'm only present to Arizona, but I have people, friends in Texas, um, that are talking about the expansion that's happening there. I think a lot of states are talking about the expansion that's happening because everybody's leaving California. I know when I left California back in 2009, there was a mass exodus that happened as well. And it just seems, again, it's cyclical. It's happening again. Here we are, 2025, and everybody's leaving California again. Um, so, because they're not learning from their lessons. So, where would we go to learn more about opportunity zones?
So you would want to go and first of all, getting information can be found in Deal Hunter. You can actually, I'll share my screen real quick so I can just pull up what I do. I've had the certification since 2022, but what I did was um, working with Roman Rubio and Ning Young. Uh, we were eager when you gave us the opportunity to learn how to do these projects right here and put information into them. Like my virtual board has has a knowledge base, and in that knowledge base are these two forms right here. The statute 131 um, is all about opportunity zones, and then Bill's 119 HR is also is the new and improved one. So you can go straight to the internet and type in um, and find a valid source for this. You can actually type in the um, opportunity zone, opportunity zone legislation 2017. And there's going to be a lot of information that comes up, but the one I look for to give me the most detailed information and the best information is going to be this congress.gov. And when I go to the congress.gov website, I validate that this was written uh, at that time. It's 2017. It's Investing in Opportunity Act. It was written by Tim Scott, um, and it gives details about the initial one right here. So um, it says here that this is one summary from S293 bill summaries. So if I want the entire thing, um, in order for me to get the entire form, I might have to go right here and it shows, all the information right here. I can copy this or I can just download it and I can make it part of my knowledge base in my GPT. It's, as you call it, the Rosetta Stone, right? You're putting this information in there and telling it how to operate within this information. So I can go get all the information I want, download it to a file, and then put that over into the knowledge base that I create right here. So what I can do is now that that stuff's in here, I can literally have a chat with it by myself and say, put in here, for example, I want to do some deal discovery. Can you give me 4 case studies? I want a residential case study, a commercial case study, an industrial case study, and a raw land case study about an opportunity zone program or project. Use the knowledge base that you currently have on opportunity zones to develop these case studies. And you'll see here that it'll begin a new conversation and start pulling data out of, and it cited it right there, um, and said we can do this right here. Now it's saying we can do this in Roatan. That is incorrect. So I'm going to stop it before it gets too far. Oops. According to the Opportunity Zone program, nothing outside of the 50 states and Puerto Rico are allowed to be Opportunity Zone. I think you need to adjust the information as it pertains to the residential case study in the Roatan Caribbean. Roatan is not part of the opportunity zone area. So giving it some swift correction right here. And again, this is trust and verify. I'm a certified opportunity zone advisor, so I already know that Honduras is not part of the opportunity zone designation. So it's going to have to back off. So here we go. Residential case study shows a project of construction of 40 single family homes. Opportunity zone die-in means investors defer potential reduced U.S. capital gains by reinvesting into a qualified opportunity fund that finances the housing. So it's not building the housing, it's financing the housing. Okay. So what it's doing is it's saying it will acquire the 5 acres in the OZ tract. Development budget's 12 million to produce the new housing and supply in a supply constrained market. And it has a projected IRR of 14 to 16% with tax advantage upside. So the impact will be that it'll provide affordable workforce housing in a high growth metro area while creating construction job services. So,
Well, and I think the other thing to talk about that I think is super important, and I don't fully understand it, but you had talked about it, is something to the effect of that the 1031 exchange is going away.
it's not that it's going away, that it. Can you show us how the 1031 exchange program and the opportunity zone program are same and different, and how the opportunity zone program is describe how the opportunity zone program is placed into the financing world in order to change the way the 1031 program works in low to moderate income areas. One of the big factors to the 1031 exchange is that you can only do like-minded or like value property. And so in the 1031 exchange, you have to do property that's of equal or greater value than what you came out of. And so when you're building in a gentrified area, affordable housing, you're not able to get rid of, or dump a 10 unit portfolio to turn around and reinvest in raw land. And that's going to be a 1031 qualified exchange. So you can't even do that right now. And so what the opportunity zone program does is it allows you to do that. It allows you to sell a property or something of greater value and then come back down to the low to moderate area and perform in that area. So let's see what it says about the likes and dislikes or differences. So they're both tax deferral tools. We already understand that. They're heavy in the real estate market. They're wealth building strategies. And they do have time bound requirements, meaning like the 1031 exchange, you have 45 days to identify and 180 days to deploy. With the Opportunity Zone program, you just have a straight 180 days, which is why people will be falling out of the 1031 and going over to OZ funds, is because with the 1031 exchange, if they don't find equal or greater value property to exchange into, which is called a qualified exchange, if they don't find that in 45 days, they can at least turn around and put it into an opportunity zone fund or what's known as a QOF, qualified opportunity fund, and they won't fall out of compliance with the tax code. So they'll be able to do something, with it still. Whereas with the 1031, they're screwed. They'd have to pay it. So some of the things that are different though is that 1031 exchange is really just for real estate only, whereas opportunity zone programs are good for real estate and operating businesses. The location for 1031 exchanges are anywhere in the United States, but in the opportunity zone, it must be in the federally designated OZ census tract areas. And that's easy to find if you go to the OZ maps on HUD.gov. I think it's HUD.gov. So one of the things
So
that I'd like
they
to do,
actually list out those zones.
it's a map. I'll pull it up here in just a minute.
Okay.
The reinvestment rules are that you must buy like kind property, like I said before, but in opportunity zones, you can invest in real estate development, startups, or business expansions as long as they're in the OZ area. Tax benefits is for the 1031 exchange is that you get to defer your capital gains until a new property is sold. But in the Opportunity Zone program, you have a step down in basis if held for 5 to 7 years, but a full exclusion of the appreciation if you hold it for 10 years. So that
So
means,
for the people who don't understand what you just said, when you said step down in basis, can you just like bring that to down to a fifth grade level?
so a step down in basis is the basis of your investment. If you invested $1 million and we 10x your deal, you get a $10 million capital gains event, right? So if you invested $1 million, we turn it into $10 million, your capital gains event is $9 million of basis. That's your tax basis, 9 million.
Yep.
That's the capital gains event. So in a 1031 exchange, you're going to take $9 million and you're going to go and put it back into property, um, of like kind property. You're gonna go real estate for real estate. So you're gonna take that capital gains, you're gonna put a $9 million into something else, and you're not gonna be able to do anything from that except maybe earn an income if you invest it into a cash flowing property. Okay, that's
Yeah.
1031. In Opportunity Zone program world, if you say, for example, invest $1 million and after 5 years we 5x it because we're gonna 1x it every year. At the end of 5 years, you have a $5 million capital gains event, meaning or a $4 million capital gains event because we took your 1 million, made it worth 5 million, or respectively, we took your 1 million, made it worth 7 million in 7 years. And what you end up with is either a 4 million or $6 million capital gains event. The step down in basis is that if you waited the 5 years and then we cashed you out as the investor, your $4 million capital gains event would be have a step down in the basis of that tax. So when you pay a capital gains tax, it's about 33% short-term capital gains. 5 years is considered a short-term capital gains event. So in that situation, you'd end up paying 30%, typically 33% actually. And so if you have a step down in basis on this particular deal at 5 years, what you're going to have is a 10% off your basis. So instead of paying 33%, you're going to pay 23%. And then if you add the 7 years, at 7 years, they'd allow you to go to 15%. So you could take 15% off your basis. So at that point, you either you would get to keep 10% more your money in 5 years, 15% more your money in 7 years, or 100% more your money at year 10. So, because that's where the trick is. At year 10, if we cash you out with $9 million, you get you get a $10 million check. 1 million of that is your investment. That is known as your principal. The 9 million is your capital gains. And at that point, since you held it in there for the 10 years, you would not be charged any capital gains on that 9 million. You're not charged any taxes on the 1 million. So that's why we exclude that from these numbers. But at the year 10, you would have a 0% tax bill for that $9 million, and then you can invest it with that in whatever you want. You can actually go party with it if you wanted to. You could take that money and go and spend it on a boat, go and buy an island somewhere in Roatan. I don't know. But you could definitely do a lot of different things with it that you cannot do with the 1031. Does that make sense?
Yep. So you keep 100% of your money and don't pay it to the government. So you could actually go and make a difference with it. You could do more impact with it. So yeah, that's super cool.
All the things. So the differences continue in timing. I explained the 45 and 180-day rule. The use case scenario in 1031s, mainly wealth preservation and deferral are held off for high net worth investors. And so in a 1031 exchange, typically you're not doing that impact investing. You're only investing to improve your bottom line. Whereas in the Opportunity Zone program, it's really truly about more impact investing because it limits you to only being able to invest into low to moderate income areas as it was dictated by the 2020 census. So that's going to be the maps are getting rewritten as we speak. So, and the exit of all this taxes owed are when you sell the replacement. Taxes are owed when you sell the replacement property, unless you do another exchange. The other way to not have to pay your taxes on a 1031 is just to die and leave your money to your family. So at that
But
point,
then wouldn't they still have to pay taxes?
they're going to pay a death tax. They're not going to pay your capital gains tax, and death tax is like 15%.
Got it.
So, but if you're smart, the next thing you do is you put all these into a family trust, and you don't have to worry about that then, because the family trust then owns it and it never has to be sold again. You can just continue to 1031 for the rest of your damn life. And your family, the idea is to get to a point that you have $1 billion in assets, providing you with $1 million to live off of. So, like, that's kind of what 1031s are around for. That's what they actually do, is they allow you to continue to grow your portfolio without having to pay those taxes to greedy Uncle Sam, right? So,
Right.
um, and what it does is it gives you what I call passive income. You call it passive income too, because you're buying properties that are income cash flowing, right? So unless you need the depreciation, then that's, a different story. It's a different topic. So, and here you can see on the exit, it says after 10 years, the appreciation is tax free. So, why the OZ program was introduced was due to the fact that Congress added to a 2012 bill called the Jobs Act. Cory Booker and Tim Scott got together and put together what's known as the Tax Cut and Jobs Act of 2017, and it redirected capital flows into LMI, low to moderate income areas where 1031 exchanges rarely happen. So it goes over how 1031 exchanges are for wealthier investors to roll over. The money stays concentrated in a safe real estate asset, such as Class A multifamily, core offices, trophy retails, etc., and very little flows back into distressed communities. The Opportunity Zone program solution created 8,700 federally certified OZ tracks where it could be sheltered and amplified. There's a bigger incentive than the 1031. There's equity style capital that flows into projects that would normally not go funded in LMI areas, and it allows for new financing vehicles such as the QOFs and QORF. You'll be watching out for that. QORF stands for Qualified Opportunity Rule Funds, and so we're going to be seeing quite a bit of those. So this was just based on the 1031. This information that I provided has nothing to do with OBA, but I did want to spread out and go look at the map with you real quick. If you go to HUD.gov, if I spell it
And
right,
here's the thing, like I want everybody to be present to, is that at this point you may think, well, this doesn't like apply to me, but I invite you to consider one day it may apply to you. Like for instance, I remember back, goodness, in my 20s, I actually went and took a class on how to be the bank and learn how to set up my own hedge fund and do all the things. And at the time, clearly did not apply to me. But I, had that knowledge in the back of my mind. And moving forward, I think it was like 15 years later, all of a sudden, all of that knowledge and wisdom that I had actually did apply. And I was able to actually take that. And that's how I formed my first hedge fund. So that's why if you can be, Hoy, I'm thinking of you in the conversations, like why we have you learning all these things so that it may not apply today, but at some point in the future, this knowledge will play into your overall strategy and make a difference for you. So, okay, sorry to interrupt. I think it's just an important thing.
I don't know if you can see my page right now. It shows the
Yeah.
map of the Opportunity Zone.
No,
This is
it's
over.
showing blank, like it's a blank rectangle.
I don't know why.
It's Roman sharing the screen, so you just have to switch, I think.
Oh, Roman screen's being shared. That's weird.
Quit sharing your screen, Roman. It says you are sharing there we go.
Now, okay, there you are. Now we can see it.
All right. So are we seeing are you able to see the map?
Yeah, we see a
Okay.
whole
So
bunch of
you can
dots.
see here, you can buy part of Canada. I'm kidding. That's Alaska. Um, zoom out a little bit more. The state with the most opportunity zones is surprisingly the state of Alaska, right? So they have the biggest amount of opportunity zones, the largest amount.
Huh.
But if we zoom in to the greater 48, you can see all these yellow splotches everywhere. Those are all opportunity zone areas, and areas that are designated for opportunity zones. Next to Colorado, Arizona's got probably more real estate than available than any other state per capita. Like I know Texas and California have more than Arizona, but that's just because Arizona, or I mean Texas and California are bigger. So, but I think from you know the point of how much land is available, you can see that there's areas all across the country that you can be doing stuff. So, and again, keep in mind, you don't necessarily have to buy property to be able to be an opportunity zone. You can start a business and be an opportunity zone business. It's called a QOZB, and as a QOZB, you could be the bank. That's what I was talking about on um, when we were looking at. I'm trying to get back over to ChatGPT. It won't let me get back in there. Um, run the case studies again. And you'll see that in that first case study, what it did was it made the opportunity zone fund become the bank. Okay. And so the business is banking, it's a finance company. And so you'll design a finance company that builds in and finances in only opportunity zone area, and boom, you need to set up a debt fund basically at that point. That's at least $12 million. You got 2 million in land and 10 million in vertical. So, and then your investors are going to make 14 to 16% IRR, tax free appreciation after 10 years. But during that 10 years, they're going to carry the note on 40 houses. Okay, they're going to carry notes or collect rents on 40 houses in South Phoenix. So it changed it from being the bank to being more of a build to rent community. That's cool. In the commercial sense, it says that you're going to build out a 30-acre commercial center along I-10 in Tonopah. This is inside the opportunity zone. We're going to put a grocery store in there, a quick serve restaurant, maybe a fuel station, and even an urgent care. It's going to be about a $35 million build. We're going to get some debt on that, and then we can use 30% of opportunity zone equity, which is $10.5 million, to get into that, operate it. And what we end up doing is we pay back that debt. It's cheaper than paying back $21 million worth of investors, because the bank, we're borrowing money from the bank at like 6%. If we were going to have to pay $21 million back to investors at 16%, like that's a lot of money. So this shows me here that what I need to do is just raise about $10 million, borrow the money from the bank, and then pay back my investors what I make the difference of on all the rest of that. So the returns are 15% IRR after over the 10 years. It stabilizes at an NOI of $3.5 million a year. So um, there's going to be a huge master plan development going out there. I already know it. It says it right there. And I can validate and agree that it's 180,000 new residents coming within the next 10 years. So this is going to need to be built anyway. The third case study shows us the precast concrete yard expansion. This is an industrial property. It's in the opportunity zone area. And so what we would do is we would acquire the business, because if it started after 2018, we can acquire the business and make it an opportunity zone business now. What we're going to be getting is, some mixers and loaders, but we're going to expand by adding $900,000 to a batch plant, buying 3 more properties. We're going to acquire the business. It says that the acquisition and upgrades is about 4.5. This is a case study, but reality, I could probably use this in a real life experiment, because I do have a business this would match up nicely with. So I might come back to that case study and run it on a real life deal. And then finally, the fourth case study was the raw land deal, the Signal, Arizona property of 640 acres. It says you can land bank it. Now, the issue with this is that I don't believe you can land bank because of the fact that you have to have something that generates income. And so it says here that we would basically sell entitled parcels to renewable energy developers for solar and battery, or break it up and sell it to builders. We can do that, but we have to hold it uh, after it's been developed for 10 years. And so I have an issue with the way this case studies broke down. I'm going to correct it real quick. I don't like case study number 4 because opportunity zones are not designed to do land banking. Can you give me a new case study on how the 640 acres would be pulled into an opportunity zone development or be a QORF, Qualified Opportunity Rule Fund? Show me how that would work in a case study. And so I'll get it to run me some more solid numbers on this. So I get a more robust understanding of how these things work. So it says to transform it into a renewable energy mixed use development hub, 200 acres of solar and battery, 150 acres of industrial flex, 100 acres for affordable housing, and 190 acres for conservation buffer roads and utility easements. So doing this as a master plan development shows that it's going to be over $100 million project, probably $150 million. There we go. $150 million project. And so to get all that done, we would take 50% of that in debt, 40% of that in equity, and 10% of that would come from the developer's GP equity. So our general partnership equity stake would be about 15 million. So showing all the returns and everything, it gives us back a 16 to 18% IRR with OZ tax-free appreciation after 10 years. It would create 200 plus construction jobs, 300 plus permanent jobs, renewable infrastructure, et cetera, et cetera, et cetera. This is a ghost town out in the middle of the desert, and it would need some more infrastructure to get online. But it's a fair case study of how opportunity zones work. So.
So it seems like the opportunities are endless. I guess the question is, if somebody wanted to get involved, like where would they begin to narrow it down?
Can you give me 3 types of avatars of the types of investors that would get into this? Start with a low entry level capital gains earner and go to mid level, which would be more like a high net worth individual, and then give me the institutional level, the high level, where like a family office or some sort of institutional investor might need to start a opportunity fund. And so it's going to probably give us like the entry level investor is going to be a capital gains earner who has to deploy 50 to 100, $50 to $500,000, 50,000 to $500,000 into something. Can't do a 1031 exchange with stock gains. So the opportunity zone provides that option. So if it was somebody who sold, let's just say it was a crypto guy that sold $500,000 in crypto, he cannot go and buy and do a 1031 exchange with that money. So if he doesn't want to pay the capital gains, he's got to put it into a QOF. And that would be a pooled QOF, meaning that we would open a QOF with 506 status. It would be a 506 vehicle. And then at that point, they can invest straight into it from there. The mid-level investor is a high net worth individual who has about 500 to 5 million to deploy, wants to diversify into alternative assets because a lot of opportunity zones are alternative investments. I don't know if you're familiar with the alt market, but opportunity zones are known as the alt market. So I've got a lot of good friends in the alt market. I actually know the president of the altcon industry. And it sounds kind of scary when you're talking about investing or financing to hear the word con, but it literally means conference. So the president of the Alternative Investment Conference, AltCon, Is a good friend of mine, Michael Hughes, and this is the type of people that he parties with. So they are already familiar with 1031 exchanges and see the upside, higher upside in opportunity zones by being in it for a longer term play. They understand that they're going to put it into something that's going to cash flow, possibly even provide them with dividend or K1 disbursement. It would not be a dividend due to the fact that this would not be a stock or a security in that fashion. So it would be considered a K1 disbursement. So the vehicle for that would be a co-investor into a QOF or a direct LP into a qualified opportunity zone business subsidiary, such as a solar farm. And a QOZB would be considered a solar farm. You could start a solar farm and make it a QOZB. From the institutional level or the family office player, basically they have 10 million to 50 million. They seek to scale and have the ability to write big checks. So what they're going to do is basically just do a project. They're not going to bring on any other investors. They're going to basically align into something that they can hold for 10 years and has massive upside appreciation so that in 10 years when they sell it, they can get all that capital gains without tax liabilities. So, what do you think about these avatars? You think you could imagine somebody else, or is there a hybrid of this that you would want to see?
I mean, I look at it from a different angle. This is it's just having me think differently about uh, how I could actually talk about this. And when I am talking to people, the different questions to ask to see if this is what they're actually dealing with. So, yeah, this is really fascinating. So, again, this is actually kind of cool because right after this, we're going into the oil and gas um, fund webinar teach about oil and gas, and that is another piece of it that when people get their money back from oil and gas, what do they do with it? That this would be another. I could see an opportunity. It's the whole 1031 exchange. I mean, my whole world is real estate, so understanding that this helps people who are not in real estate, it just opens up a whole new layer of conversation for all those people. So that's exciting.
What are the ways that you can experience a capital gains event aside from real estate?
Well, like you just said, the stocks,
Yeah,
crypto, oil and
it's gonna
gas.
it'll list it all out right here. So
Yeah.
stock market and securities, private business ownership, sale of private business, collectibles and tangibles such as art, antiques, jewelry, etc., classic cars, precious metals. The precious metals part right there, that's what I wanted you to talk to that Pugsley and Sons about. He's the gold and silver concierge guy. You remember him, the guy with the mustache?
So yeah, I mean his clients would definitely benefit from this.
Right, exactly. So intellectual property, cryptocurrency, digital assets, and then the sale of commodities, futures, promissory notes, other debt instruments that provide you with an increase in capital that's not recognized as income. So um, the only thing you can do with money from any of these other like any of the capital gains sought from these would not qualify as a 1031. So you can't 1031 out of the stock market. You can't 1031 out of private business. You can't 1031 out of your baseball card collection or your
So
sidelines.
that's actually kind of cool because there's a huge wealth transfer with so many companies being sold um,
Right.
because the kids don't want the businesses. This is another conversation that as those companies are being sold, that they could invest inside of this to not have to pay the capital gains.
Right, exactly. And with all of these, they can put them into these funds and start getting reduction in basis. So you don't want to hold it for 10 years, but you want to maybe set it aside for 5. You're not going to end up having to pay 33%. So that's a step up in your basis right there. And the fact that in 5 years, instead of paying 33%, you're going to pay 23%. It just makes more sense to put it over there so you can save some money, you
Right.
know? So it's showing that you know there's a way to have impact investing. Opportunity zones provide that, and it throws a big enough net. It casts a big enough umbrella that it protects every type of. This is what they say. Oh, Trump's protecting his buddies. He's protecting everybody that gets a capital gains, not just his real estate buddies, but everybody. And
Right.
and I can guarantee you're on both. If you're blue or red, it doesn't matter. You're making money off the stock market. You're making money off of private businesses getting sold. Intellectual property songwriters get money and royalties, and that counts as capital gains. It does not count as income. And so I've got some things that I've published. I get money from those things that I published, and that money is taxed as capital gains, not as income. So talk to your CPA about this stuff still for sure, but make sure you're talking to a CPA that understands opportunity zones. I've asked CPAs, I've asked lawyers about opportunity zones, and they're like, oh, I don't like it. It's too complicated. Oh, that means you don't want to open a book and read. Got it. So when I hear that come from a lawyer, I hear that come from a CPA, that opportunity zones are too convoluted and they don't want to talk about it. It's because they're stuck in their ways. They like to make money the way they like to make money, and they don't want to step out of that box. And so when they have to step out of that box, it means they have to learn new shit. They have to be liable for what they say, liable for what they do. And listen, if I'm a construction worker building Cracker Jack box houses, I'm not going to go off and try to learn how to build a custom home when I make a good enough living building, track houses in subdivisions. So when I watched my dad doing that as a kid, I realized I had too much creativity in my blood to just build the same house every single day. So I decided I wanted to be a custom home builder. And I can tell you right now, it's a whole different set of problems, but the basics are still the same. You have to use 2x4s and nails to make the shit come together, you know? So for that standpoint, it's basically the same thing. But what I did was I stepped out of the box and I learned how to do something that was more difficult and more specific, and I made more money. I made more money than my dad by the time I was 23, 24 years old. I duplicated my dad's income, and by the time I was 28, I doubled it. And so I was literally making twice the amount of money as my dad before I was 30. And and that came from stepping out of the box. Like he had me in a box as a kid building track homes and subdivisions. So this is what I liken it to is if you got a CPA or a lawyer, they've been a CPA or lawyer for longer than 10 years, they are probably not going to want to learn about the opportunity zone programs. Now that it's codified, now that it's permanent, you're probably going to see these old codgers, come up and start learning it and using it a little bit more. But at the end of the day, it comes down to finding someone that's passionate about it, knows about it really well, and wants to play the game with you on it, you know.
We should actually find some attorneys and accountants who are who fit that box.
Please provide me with a list of attorneys that we already currently use and maybe some that you can find on the internet that are familiar with the Opportunity Zone program, specifically like Andrew Doup, spelled DOUP. He's a SEC attorney that specializes in opportunity zones. Go out and find Andrew, tell us information about him, and then give us a list about 4 or 5 others that are like him. And this is what I love about my board and my Rosetta Stone is that it does all the things that I need it to do when I want it to do it. And boopity boop, here we go. So Andrew is from Columbus, Ohio. He is known as the syndication counsel. He sets up syndications a lot, knows how to put together the PPMs, Form D filings, and all the stuff for OZ content. Um, and he's really one of the best attorneys that I've talked to when it comes to real estate syndications and QOF structuring. So really great guy, really good guy to know. Now, as far as the others down below, I can't say I'm going to vet them because I don't know about them. But what ChatGPT was able to come back and tell me is that all these people are players in the QOF program. I don't know if move that out of the way. Um, and it gives me, their geographic strengths, practice focus, and then tells me what we might be a good match for. So I can even make it go and get me their information. This
I
is a
think
great list. Provide me with contact information for every single one of these people and how I can get a hold of them. And there we go. I've got address, but no phone number. I've got Andrew's phone number directly. Everybody else got a phone number. That's pretty funny. So, it listed a couple people. This is pretty cool. So, like over at Blackwell, it listed the top 4 guys and gave their direct info. So I can directly email them or just give them a call. And it's got these other 2 down here. My phone is blowing up this morning. People need to know I'm on a podcast.
And I think we're kind of, I think just to kind of speak on this, it's just we're a little bit, we want to say shorthanded because a lot of people are aware about the whole how opportunity zones work, and that's the reason why a lot of people have not been able to, jump on this whole situation. And again, not a lot of people know about it, so that's kind of our duty to kind of inform all those people as well, and that's one of the reasons why we're kind of contacting some of the city municipalities out here to be able to see what they have going on and be able to reach out to them and help them out with these these funds.
That's awesome.
Yeah, one of the things that we're working on currently, Roman is has pretty good connection to the city of San Luis. And he is able to find out what property they have available. Excuse me. I just tried to do a little background check on my boy here. So it gives some information about Roman if you're interested. As far as like getting licensed for that, the Opportunity Zone Advisorship does not have a current license structure for it, but I do believe it'll come. Sorry, I'm having a coughing fit. But what Roman's been doing is talking to the city where there's opportunity zones. I'll go back to the map and I'll show you where his playground is over here in Arizona. He's out here in this area known as the Yuma Proving Grounds, or near the Yuma Proving Grounds.
It's whole Yuma County, and I guess it's known for the that this area feeds the world because of the agricultural aspect of it. And but one of the things too that I was looking into, as far as getting into the funds, and investing into those areas is logistics side, because it's a border town to Mexico, so there's the agricultural and the cattle business is big, but it can actually get bigger. As right now with the problems of having feeders and not being able to have certified, just ranchers and everyone, that type of service is not available right now. The only one that was available was back in Nogales and kind of by Casa Grande. But this area is actually bigger than all those areas, But again, those are the big port of entries that we can actually bring in that type of money into those areas.
Yeah, so and you can see here that when they drew the map, they put these areas together. Like it literally splits this road right down the middle. Everything on the west side is in it. Everything on the east side is not. But we do know from being in as certified opportunity zone advisors, we do know that everything across the street is going to be qualified opportunity zone area, because the way that they wrote it was that anything that is next to or contiguous to the area also is involved. So as long as we build like directly across the street, not like down the street down here at the end of this road, it has to be literally across the street. So We also know that they're going to be changing the maps pretty soon. But what Roman's after is like here in the city of San Luis, excuse me, they have all this property out here. And I wish I could pull up. I don't think this map has kind of like the way that San Luis looks. I know I can probably pull that here on a map here. We'll go look at San Luis real quick.
I'm gonna give you a website also in there to kind of see, because there's a live camera because of the traffic that goes in and out. You know, every day you're able to see where the line is at. You know, to cross over from both sides. So
Yeah,
there's a
I've
little
seen that
camera
one.
the city of San Luis, Arizona provides, and you're able to see that. So it has like a live feature to it.
And that's something that I we need to mention is that San Luis is struggling because they only have a population of maybe like just over 5 or 10,000, 15,000. I can't remember how many people are there. How many people are there, Ro?
It's 40. It's considered 47,000 just on that little Arizona side, but the city across, so everybody that crosses more than, I think there's the daily crossing is, I want to say, more than 100,000 a day.
Right. And
So yeah, we also neighbor. So it's like a little four corner kind of thing, whereas Arizona, Sonora side, and then it's also the border to Baja California on the Mexican side, and
right,
we also are border to California.
right. You got like four corners right there. But you see this area I'm circling heavily right here? That right there is the port of entry. They're building all this stuff right here. This whole area is going to be port of entry. And so all this property that's out there, oh, I got to get rid of that. There we go. So all this property out here can be developed. You see, these are just trucking depots. This is just a big trucking depot where they're switching out stuff from Mexico to go over and go up north into into the country. So these ports, they're all under construction so that they can continue to expand the importing and exporting part here. So this is all prime property that is owned privately. But then there's also spots out here that are owned by the city. Like this whole section, I believe, between these two buildings, the wholesale and the factory sale building, that whole strip of land right there is owned by the city. There's also some vacant infill lots up and around here by the plasma building and out over across the street on the other side of the Plaza Drive. There's stuff out here for sale by the city because the city like ended up inheriting it from the previous owner who maybe didn't pay taxes or something like that, you know. But you can see like the CDB village out here, these apartments. That's an example of an opportunity zone business that can go out there. You have the school right across the street. So anywhere that the city owns land, Roman's going to be asking them to, you know, let us have an opportunity to design something and make something for an opportunity zone fund to come along and buy and build and develop. So our job is going to be to get the property, create the project, and then provide it to the city for that purpose. So not even quite sure what that
Along
is.
with that, I was actually yesterday I was hanging around with some of the employees from the city of San Luis, and
Yeah,
councilmen, and along with just people that are aware of what can be done, as far as the projects. Uh, and then remember the border town San Luis, and then 4 miles away is Somerton, and then it's Yuma, right? So all the agricultural areas right there, they don't have a
all that green.
manufacturing spot where they actually need to go all the way to Yuma to get it packaged. But I'm coming up along with some ideas of, again, on the logistics side that we can do by the border again. And I was thinking of distribution center, for the produce. But also a big thing will be to be able to also be able to have some type of feeder, the cattle feeder over there, because uh, there isn't any on this part of the
Right.
the whole area, and it takes all along with LA and everyone else. So there's a lot of
Yep.
things that I already thought about opportunities that we can make, and then they'll bring the ideas of what they also need as far as help. Again, we need to also help them out. Make a projection for how the city's going to grow, and kind of um, put some of that money into their public works, which is
Yeah,
another thing we can work
and
with.
that's the other thing is, like I said, you got 50,000 people living there, but 150,000 people go through that town per day. So when you have a population influx of 100,000 people using the services there, they don't have enough water, they don't have enough sewer capacity, they don't have enough power coming out of the electric grid. So the only way that goes up is by bringing in newer, bigger developments that are going to pay for those upgrades. And so that's one of the key factors to working together with Roman on this is we're able to find some property that will be easy for us to develop, discover the ways we can develop it, because you can see here now based on this map you've just looked at, the other side of it. There's all this yellow stuff, like it's all available to figure it out. So we can either find it on the private market, we can find it off market, we can find it from the city itself. Up here in the city of Somerton, where Roman was talking about before, you can see right here, Somerton. Um, the major part of Somerton was left out of the opportunity zone. Why? Because they want to develop outside of this area. You can see the stuff that's already developed, right? And so all that's in the white. What they want is they want us to develop now inside the yellow. And so there's areas that are just outside of town that are still owned by the town, and they want to give us the opportunity to build there. So we're gonna try to find a way to do that. Let me go pull up Somerton so you can see how big that is.
So while you're doing that really quick, I have to go to the oil and gas webinar and get everybody set up for that.
Yeah,
So
yeah,
this has been, yeah, I think we need to keep this conversation because it just feels like this is like Pandora's box instead of understanding all this. This is so good.
Yeah,
yeah.
I'll
You can
see you
see all
guys
the
later
areas.
on. I'll head over there to Phoenix in about around 3 or so.
Yeah, yeah. All right, buddy. Well, Catherine, I appreciate you coming in and sharing all this with us today. Everyone else, I'm glad you all showed up. A little quick prayer. Heavenly Father, protect everyone that's in this room and give them the ability to love their family and be a contributor to your great earth. And we are grateful for all that we have here. In your name we pray. Amen. So
Amen.
thanks everyone for coming in, and we'll see you all on Monday. I'm thinking about starting a Saturday deal. So maybe doing some driving for dollars, live broadcast of me out driving for dollars, but we'll see. So we'll talk to everybody later. Have a great weekend. Bye bye.